All right, guys. Good morning. Good morning. Hope you guys are doing good today. It is Friday. We got non-farm payrolls and unemployment dropping at 8:30 Eastern Standard Time. Expected at 75,000 for non-farm payrolls. Unemployment expected at 4.3%. Yeah. Big day. You know, honestly, there's talks of maybe they're going to revise May and June numbers down again. It'll be interesting. You know, we did have some news that came out overnight, yesterday, I think, in regards to a Japan and U.S. trade deal. So yesterday, the president signed an executive order implementing the July trade framework for Japan. The move solidified a base 15% tariff on all Japanese, or nearly all Japanese imports, including autos. This did replace the higher rates like 27.5% and avoid stacking with other tariffs. The new tariffs are retroactive to August 7th, offering customs refunds for overpaid duties as well. Certain products such as autos, aerospace, pharmaceuticals, and scarce natural resources have tailored tariff treatment. It's a $550 billion Japanese investment. It's one of their catches. There's a $550 billion Japanese investment as part of the agreement. They pledged to direct $550 billion into investments in U.S. projects aimed at boosting energy, infrastructure, manufacturing. And Japan's also going to increase U.S. agricultural purchases such as rice, corn, soy. I can't talk today. Soybeans, bioethanol, including sustainable aviation fuel, by about $8 billion annually, and they'll buy 100 Boeing aircrafts along with expanding U.S. defense equipment. The Japan Prime Minister welcomed the deal as a diplomatic success. South Korea is assessing the impact as its automakers like Hyundai and Kia continue to face tariffs at 25% on U.S. exports. And the market's up right now. Look at the NASDAQ. NASDAQ up to 23,796. And we'll see if this holds. Honestly, most of my investments are pretty green. I bought Marvel. My average price in Marvel 62s. We're at almost 65s right now. So you love to see it. Very nice. We'll take that. Unemployment rate's expected at 4.3%. 4.3%. Is what it's expected at 4.3, which is a uptick of 0.1. Last time was 4.2% for unemployment. This time they're expecting 4.3. So yeah, it's a big day. Music stop already, bro. What's up, Gilbert? 1, 2, 3. Ed, Martin, Michelle, P, Jake, Mark, AZ, Sam. Hey, good luck, Sam, on that short position, bro. Slither, Alyssa, Kado, JP, Ray, Crypto, Martin, Gamebread, Caesar, Rick, Abed, everybody else. What's up, guys? Marco, Outpost, Mr. B, Hank. All right, guys. I don't know. It depends on what happens, to be honest, man. Like, a lot of this stuff is going to depend on what the payrolls actually show, right? So what the payrolls show is going to influence a lot of stuff, as well as whether they revise things downward again for May and June. There's rumors of them revising these numbers down again. So again, economists are forecasting for non-farm payrolls about 75,000 jobs, which is barely above July 73,000, which is, you know, obviously a sign of continued labor market softness, right? Unemployment rate, again, up from 4.2. It's expected at 4.3%, which is the highest since late 2021 and up from July's 4.2. Again, analysts are warning of further downward adjustments to May and June job figures, continuing the trend of substantial negative revisions seen in the July one. We had jolts earlier in the week. It slumped a little bit. Switching and hiring activity is frail, they're saying, and layoffs spiked in August, especially in sectors like retail, tech, and finance, fueling concerns about broader economic fragility. The weaker these numbers are, the more likely we are to get a rate cut on September 17th. So the weaker these numbers are, the more probable rate cuts become. and vice versa. You know, the stronger these numbers are, the less probable rate cuts become. But I think we're pretty set in stone for a September rate cut. So the initial release, the first jobs report for a given month, is based on incomplete data, often around 60 to 70% response rate. Not all businesses report their payroll data promptly. The BLS issues 2 automatic revisions. The first revision appears in the following month, and the second revision comes 2 months later. These incorporate responses that arrive late and recalculated seasonal adjustment factors. They also do an annual benchmark revision, which I believe is going to be next week. We're going to get an annual benchmark revision, at least one of them. The May and June numbers already revised down by 258,000 jobs. And, yeah. Broadcom last week. Yeah, I mean, AVGO earnings up a lot from earnings up to 340s. We also had C3 AI earnings. They reacted pretty negatively from these, though. I think it was C3, right? Let me make sure. Yeah, Lululemon down. Man, dude, I hate to be right sometimes, bro. I hate to be right. I know a lot of people invested in this. It's all about the story. You got to look at the story of of sales in the last 5 years for a company, and it becomes predictable. I'm not saying it's like super predictable, but did I not call this for Lululemon? Again, I mean, it's pretty obvious to see Lululemon got popular mostly. I mean, they've been around for a while, but they got popular during 2020 lockdowns. Everybody's at home. They want to wear yoga pants, right? Now that that dynamic is not there anymore, they're going to lose sales. I mean, this is pretty obvious. And they're down big, almost 20% right now. 206 down to 160. Again, AI issued disappointing earnings, weak guidance. Yeah. Yeah, I mean, and again, I've been talking about Lululemon in the same dynamic for years. Like, I've never liked Lululemon as a company. It was overinflated. People would argue with me. They would argue with me a lot about it for some reason. I don't know why, but people would argue with me about it, and they would tell me they're investing their kids' college fund into it, and now I just feel kind of bad for them, you know? They let their pride get in the way. All right, NVIDIA's been battling 170 for days now. If we take a look at NVIDIA here, NVIDIA's basically been sideways for days. Here's 170. So NVIDIA's sitting right at that 170 level. Hasn't really been able to hold over it for any extended period of time. Yeah, so UK Prime Minister Starmer is stepping down. Chancellor Reeves will stay in place as Chancellor, according to The Guardian. We had some other news this morning. The president did say this early this morning at about 6 a.m. market time. He said, looks like we have lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. End quote. The president. President also said he's growing pessimistic over prospects of ending the overseas conflict in overseas Eastern conflict. BioNTech and Duality Bio announced phase 3 trial of ADC candidate met primary endpoint of progression-free survival post-metastatic breast cancer. Tesla said their board is proposing a new compensation package for the CEO Musk. Or no, not Starmer. I'm sorry. It was Rayner exit. Rayner has exited, not Starmer. So Angela Rayner resigned as UK Deputy Prime Minister. It wasn't the actual it was Rayner, not Starmer. My apologies. I got that wrong. Tesla goals for Musk include 20 million Tesla vehicles delivered, 1 million robotaxis in commercial operation. And yeah, again, we got the non-farm payroll report. Yeah, Broadcom is up big. AVGO, after a $10 billion deal, shows AI strategies paying off. They beat Q4 revenue guidance, was up. Meta is paying a 24-year-old AI researcher $250 million. Tesla says the new pay package valued at $88 billion if he adds $7.5 trillion in value. But he'd only get it if it's 7.5 trillion in value. Just to put this into perspective, what's Nvidia now? 4 trillion? So it would nearly be twice the size of current Nvidia. You know. All right, let's get a timer up. I realize I don't have a timer up right now. Let's get it. We got 1 hour. My friends, 1 hour until this report. Are you bullish or bearish? I don't think I did a poll yet either. Let's get it. Are you bullish or bearish on this report? Yeah, Nvidia's looking weak. Again, AVGO is up. Nasdaq's testing that 23.8 level that we have on the chart. Look at Broadcom. Gold is at 3,600 an ounce still, so it's pretty much flat. Yeah, so in less than an hour, guys, if you're just now tuning in, the BLS, Bureau of Labor Statistics, will release its big anticipated monthly situation report for August in employment. This look at U.S. labor, often referred to as the job report or non-farm payrolls, is a critical economic indicator that can sway financial markets, influence the Fed, and offer a snapshot in the nation's economic health. Non-farm payrolls, an increase of around 75,000 is what's expected. This would be a slight improvement from July's really low numbers, but would still represent a pretty big slowdown in the job market. Unemployment expected to uptick to 4.3%. 4.3%. This was 4.2% last time. Again, this measure derived from the household survey indicates the percentage of the labor force that is jobless and actively seeking employment. We also get our average hourly earnings, a key inflation indicator. Average hour earnings are projected to have increased 0.3% month over month, the same as July. On a year-over-year basis, wage growth is expected to be around 3.7%. You know, the full report, which we're going to break down live as soon as it happens, contains a wealth of data. A lot of stuff. An array of data. It provides a nuanced picture of the labor market. It's compiled from two main surveys, the establishment survey and the household survey. Let's see if the 788 level we got on our charts is still holding. So again, this report is compiled from two different surveys. And this is why it's inaccurate sometimes, is because it's derived from the establishment survey and then another household survey. From the establishment survey, it's businesses and government agencies. It's the source of non-farm payrolls number. Look for industry breakdown. You can pay close attention to which sectors are hiring and which are shedding jobs. Strength in goods producing sectors like construction and manufacturing can signal economic health. Growth in service providing sectors, healthcare, leisure, and hospitality can also drive job gains. But again, we have seen some pretty big revisions in this report. Last time they revised May and June numbers down 258,000. You know, it revises the payroll number for the previous 2 months as more data becomes available. These can often be more telling than the headline number itself, and big downward revisions can indicate a weaker underlying trend than initially reported. Again, as for the average hourly work week, this metric reflects the number of hours worked per week. A longer number can suggest that businesses are seeing strong demand and may soon need to hire more workers. And then we have the household survey. So that's the business side of the surveys. Then we got the household survey. Household survey, look at this pullback in markets. It might be from India deposit growth, which came in at 10.2% versus 10.1%. FX reserves at 694.23 billion versus 690 expected. Or previously, Indian bank loan growth at 10%. Previous was 10.2%. Maybe some of those numbers and the nuance of what's going on between us and them are influencing the market. Maybe not. I don't know. Yeah, and just to keep going into this, right? The household survey, large sample of households provide data on the labor force status of individuals. It includes unemployment rate, again, expected at 4.3%. Labor force participation rate, it measures the percentage of the working age population that is either employed or actively looking for work. A rising participation rate can be optimism in job markets as more people are encouraged to seek employment. A decline can signal discouragement. And then we got the U6 unemployment rate, right? I'm just trying to show you guys like what to look at in terms of this report. U6 rate is a broader measure that includes not only the official unemployed numbers, but also those who are marginally attached to the labor force, including discouraged workers and those working part-time for economic reasons. Again, yesterday we had ADP numbers that showed 54,000 in August, falling short of expectations and a really weak number as well. And so if that's a sign towards today, numbers might be weak. We also had jobless claims higher than expected yesterday. So, and when we look at all this, right, like you can see, this is from Live Squawk. This is what most analysts are expecting today in terms of numbers here. So again, the median estimate coming in right around 75,000 for non-farm payrolls. Median estimate for unemployment at 4.3%. But you can also find banks you like and see what they're guessing. Deutsche at 100K, Lloyd's 105,000, JP Morgan 96, Santander 95, Bank of America 90, Capital Economics 90, Wells Fargo 90, BNP Paribas 90, Credit Agricole 80, Danske Bank 80, Oxford Economics 75, Barclays 75, Bank of Montreal 75, Morgan Stanley 70, UBS 70, HSBC 70, Dawa 70, Societe Generale 68K, Goldman Sachs 60K, Citigroup 45, TD Securities 25. TD having it at 25 is wild, but they also only expect a 4.2% unemployment rate. So we will see what happens. I think we'll probably get a lower unemployment rate maybe, but who knows? We'll have to wait. Abed said, I watched trading videos. I watched a video talking about how even a 90% winning rate can have 100 losses in a row. yeah, I mean, this is because of this, right? Like, people like to reference the martingale strategy, but the martingale strategy simply does not work. And the reason it doesn't work is because in order to lose in the martingale roulette strategy, you basically double your bet. You bet $10, you lose. You bet $20, you lose. You bet $40, you lose. You bet $80, you lose. And so in order to like lose your bankroll, you'd have to lose 6 times in a row. And the average person's going to be like, hey, well, you know, you're never going to lose 6 times in a row. Yes, you will, and you will lose everything if you do. Right? It's one of the reasons it just doesn't work. And so people have these misconceptions about accuracy, but you can and sometimes will lose that much. Sometimes you'll win that much as well, though. Gold fighting back. NASDAQ dipping a little bit here. Sorry, Sam. I saw something about something. Hold on. What's up, Faye? Mo? Sam? Metaverse? Victor? Everybody else, sorry. Can't really go through everybody now. Do we break highs again? I did a poll. 60% are bullish from this number. 40% are bearish. If the decision of the Fed depends on a wrong data, how can this decision be on time? That's impossible. Well, I mean, I think we see a lot of parallel signs of a weakening labor market. I don't think it's just one report, right? JOLTS was lower than expected. Jobless claims were higher than expected. Non-farm payrolls were lower than expected. They were revised down as well. And GDP and unemployment is expected to rise. And so it's not just one report that shows weakening in the labor market. It's multiple different reports at this point in time. As well as, like, I'm not going to say they have inside information regarding what to do here, but they probably have some signs that the labor market might be weakening. They got more data than we do, that's for sure. So. I'm bullish for today, but these jobs reports spell a lot of trouble ahead, even with rate cuts. Yeah, it depends on how aggressive we are, too. I think, you know, like how aggressive we are in terms of those rates is going to dictate things as well. Okay, so non-farm payrolls, the preview, like the median estimate is 75K. Focus on revisions. The upcoming payroll is expected to show a median increase of 75K. One standard deviation range, 56 to 96,000. Yeah, I mean, this is a big report you want to pay attention to, for sure. All right, we're down at 788 here. ABGO at 340s. NVIDIA at 170s. All right, guys. Yeah, the real story is revisions, according to a lot of people in this report. We're getting a pullback here. You know, maybe we'll get some trades depending on what you guys think the market's gonna do. God, are you thinking of divesting again like last year? Not right now, personally. Like, look, sometimes the market and the economy can be, I mean, and they're two completely different animals here. Like, market, an example of this is like, from 2020 to like 2024, the market ran pretty big. Yeah, we had some small corrections in between, but like the market ran for the most part in those 3 to 4 year periods because of the AI boom that was happening, and everybody was at home, and so they could focus on it more, and it was just like this really interesting dynamic. During that period of time, the economy was in shambles. The economy was bad. We had lockdowns, we had unemployment rising, we had weak numbers early 2020s, and then by 2022 those things started to ease with the hawk cycle that the Fed did, the rate hikes they did. They raised rates, they did QT, and then inflation started to spike, right? And so it's not always a reflection. The stock market is not always a reflection of the economy. Obviously it can be, but it's not always. And so I don't know what the market's gonna do right here. Either way, I'm probably just gonna add to it if we pull back. It might take a while, and I might sit on it long term. Who knows? But yeah. Now would be a good time to hostile takeover of Lululemon. Yeah, I mean, listen. The reason I never invested in Lululemon is simple. It's a fashion company, and trends change, fashion changes. What you'll really see from each new generation is you'll see, like, I have kids, right? I understand this dynamic because I see it. We wear something. My generation wears something, right? My generation wore freaking, American Eagle and, Doc Martens and baggy pants. And then, yeah. Either way, my generation wears something. And by the time we have kids, those kids don't want to wear the same thing their parents wear, right? And so what we see like my generation wearing Lululemon, but now the young people, they don't want to wear Lululemon. If anything, they're criticizing yoga pants now, right? And so you see this dynamic pretty consistently throughout history. Fashion's cyclical anyway, so eventually it might come back around, but that's not necessarily good for a $600 overpriced inflated stock that sells yoga pants. You know what I mean? And so that's kind of what's going on. Doc Martens, bro. Everybody had those things in the late 90s. I remember I was a kid, but I had them, Fidget spinners, another good example. Trends change. Yeah, Tesla's had some news about pay packages for the CEO. They're going up and down, but they're up pretty big today. AMD is slightly down. Nvidia's slightly down. Google's flat. Apple's slightly red. A lot of stuff's flat. Most things are probably waiting for the payroll and unemployment report at 45 minutes. There is a jobs report timer. It's over there. Like, look, over there. Wait. Over there. Right there. Are you bullish or bearish on the Saints this year, bro? I want to believe in Rattler. I really do. On Spencer Rattler, I want to believe in him. My heart's telling me yes. My brain's telling me no. Like I watched him on, in high school, in some of those documentaries. I want to see him do well. I really do. I hope he turns into the quarterback a lot of people want him to be. I'm just skeptical, but I want to see it happen. Of course, I want the Saints to win. Can y'all not see the timer right now? We got multiple people. The timer's over there. It's the bottom left corner of your screen right now. Chicago Bears, I hope you're wrong, sir. I hope you're wrong. Look, there's the timer. You're welcome. Yeah, we got 43 minutes. Ooh, it's time, guys. It's time. It's the payroll report. I did not sleep good last night either, bro. Again, will they revise jobs down again? And remember, guys, next week, we have the big annual benchmark revision. I think it's on Tuesday next week. I believe it's Tuesday. I'm not 100% sure, but I believe it's Tuesday. I believe it's Tuesday. I don't... yeah, we'll see. I believe it's Tuesday at 10 o'clock is what I think it is. If we do cut rates, somebody was talking about somebody was showing me it was an income producing symbol based off of mortgage. I think they said it was like collateralized debt obligations. I don't know. Hold on. And the theory is, like, if we do start cutting rates, maybe these are going to go up. Maybe it's a real estate investment trust. Can't remember what symbol it was. I think it was... maybe it was this one. The move's probably already baked into this, though. Like, the higher chance of a rate cut, the more these are moving here. So I'm looking at that. This thing's volatile, though. But as we've gotten more and more probable for rate cuts, these have gone up. All right, guys. Hey, we got 40 minutes left. 40 minutes. Ooh, it's time. Again, hit the subscribe button, hit the notification bell. We appreciate it. We got the non-farm payroll unemployment tape today. We got almost 1,000 people here already. Be ready, 8:30 Eastern Standard Time. We're going to cover this live. Yeah, just be ready. Didn't Robinhood already get added to the S&P? I gotta ask Gemini. Gemini's the most accurate one. Nvidia now under 170s again, chat. Under 170s. And again, looking at these numbers, people are fearful right now. No, Robinhood is not currently in the S&P. Yeah, they selected other companies in July. But I don't know anything about when they were going to announce added. MicroStrategy. Yeah, Bitcoin today, if we take a look at Bitcoin. It looks strong. It looks strong. Bitcoin up to 112.7. It's almost 113s here. Bitcoin making a bounce back. Nasdaq's pretty flat. We will trade some of this if we can find some good stuff. We're pretty green yesterday. Thinking about buying this right now, but I was gonna buy this retracement and it just pushed up way too soon. Ah. Oh well. All right, guys, 40 minutes. The payroll data comes out 40 minutes. A pretty big retracement. I'm gonna buy this now. Take 3 micro positions. If we get a little pop here, maybe 4. The range is small, but we might get a little bounce. It looks like we want to bounce at the 200 exponential, but we're also very sideways, and maybe we'll trend a little bit more sideways. I'm going to start reducing size. We'll hold a piece of it. Yeah. Okay, we got out pretty small. But we're getting a little too choppy for me to attack anything here, I think. MicroStrategy. Isn't it just strategy now? It's up a lot today. Bitcoin's up too. GameStop earnings. What should be the jobs report number to have a bullish market? We really don't know, right? Like, strong job numbers might signal less optimism regarding rate cuts. Weaker job numbers might signal more optimism, but a weaker economy. I don't know how the market's going to respond. You got a 50-50 shot up or down, but I genuinely don't know how the market's going to respond to this. Sometimes the market responds favorably recently in terms of like economic weakness, because it means earlier cuts, more cuts, earlier cuts, which the market kind of wants. Sometimes the market responds negatively with really weak numbers from the labor report. And so we really don't know what the market's going to do. Rate cuts are going to be 2 p.m. on the 17th next Wednesday, in 2 weeks from now. 2 Wednesdays from now. Yeah, September 17th, what we're going to see. Yeah, and again, it's pretty probable at this point. If we take a look at yields this morning, you want to see what yields are doing, or you want to see what rates might potentially do, you got to watch yields. And yields are down again today. So they dropped yesterday and they're down pretty big. Look at how much yields have fallen. And this mirrors interest rates. Right? So like, look at yields and the decrease we're seeing in them. Even just since yesterday, we've seen a decrease from about 4.22% down to 4.157%. And so what this means is people are expecting potential weak numbers in this labor report, is what this shows. Like, this shows that we got a lower interest rate sentiment, meaning they see economic weakness and more justifiable rate cuts, is what the 10-year yield is showing us here. We also see rate cut odds and see where they're sitting right now. They're sitting at 97% still. They're virtually unchanged from yesterday. But we still got a 2.6% chance of a pause. I don't think that's going to happen, but you never really know, and we'll have to wait and see. This Friday will rally today? Maybe. I hope you're right. CPI data is 8:30 on Wednesday, or maybe it's Tuesday, actually. Yeah, CPI data drops. It's weird. Next week, we got PPI data dropping first. So yeah, next week, Wednesday, PPI, Thursday, CPI data. Friday, consumer sentiment report. Right, so that's what we got going on. So again, PPI Wednesday, CPI Thursday. And then the week after, that's the Fed decision. So a lot of stuff happening, a lot of stuff going on. We'll see what we get. But these are just levels that I have on my chart specifically. They're just support and resistance levels that I've drawn. I will draw more if we can find some good levels. We're basically flat on the day, though. Yeah. And again, we can look at what some of these analysts are expecting. So Lutnick on the Japan trade deal says the president has complete discretion where investments go in the CNBC interview. Again, Lutnick spoke about the president having total discretion on the Japan $550 billion investment deal. Yeah, we got non-farm payrolls, unemployment, government payrolls, private payrolls dropping. And that's a big part of the report. So remember, the payrolls report has a lot of stuff. We got the unemployment rate, of course, part of this labor report. But in terms of payrolls, we get private non-farm payrolls for August expected at 75K. Government payrolls are expected break even. Last time they came in at negative 10,000. Manufacturing payrolls came in at negative 11,000 last time. They're expected at negative 5,000. This time, participation rate last time was 62.2%. And we get the U6 unemployment rate last time was 7.9%. And so, yeah. Average hourly earnings expected at 0.3% on the month and 3.7% year over year. That is expected to decrease a little bit year over year from 3.9% last time to 3.7% this time. 33 minutes left, chat. 32, 30, 31. Yeah, we got non-farm payrolls 8:30 Eastern Standard Time. Y'all be ready. It looks like we got out of that short just in time. Look at the NASDAQ fall down here. Again, the SPY at 650s. NASDAQ falling down, dropping a little bit ahead of this report. All right, so this could be overseas news. So Ukraine's military says it hit Russian Ryazan oil refinery overnight. I don't know if that's making markets drop. It's possible it is. See where Nvidia goes on this report. Should we cut rates this month? Let me know ahead of this report. Should we cut rates? Yeah, bulls are at 65% today on this report. 65%. NASDAQ's still falling down. Look at this drop. I think we got to look at this level now. 770. I think we got to watch that one now too. Yes, but 25 only, not 50. I don't think we're going to cut 50. The only way we cut 50 is we get really weak numbers today, really weak benchmark revisions, and low inflation data next week. And even still, we might not do 50. Even then, again, we might not do 50. Yeah, I mean, oil has been trending down since 755 or so. Look at the NASDAQ falling here. Lutnick on tariff said these big deals are going to stay. He said the president has all sorts of other authorities on CNBC regarding tariff ruling. BLS says data retrieval tools are currently not available as of 8 a.m. What does that mean? All right, so look at that bounce at 770. So we did bounce right around to 768. Again, I just saw that the BLS says data retrieval tools are not available. Okay, so my guess is that the BLS website and data servers are experiencing a crash or have been temporarily taken down due to overwhelming traffic right before the 8:30 release of the jobs report. Everybody's tuning into this, man. This is an important report. Nvidia's breaking down ahead of it too. It's under 170s. Look at Nvidia. Yeah, the payroll report is one of the most intensely watched economic releases. So it might be overloading the data. Productivity went up 3.3% in quarter 2 2025. Human labor costs increased 1% yesterday. God, can you explain the outcome if it benefits low or high numbers? So payrolls is jobs. Okay, so the logic of this report is how many people, like, these are job openings, like these are payrolls, jobs that are open. And so higher payroll numbers signals more economic growth, more business expansion, more people working, labor strength. Lower numbers signals the opposite of that, right? And that's in regards to payroll specifically. Unemployment is the opposite. So obviously, higher unemployment number means more people are unemployed, right? Which is weak labor data, not good. And so it depends on which one you're looking at. If payroll numbers, and again, I'm just talking about the economy. I don't know how the market's going to respond to this data. I really don't. Market can respond to this data in a bunch of different ways, in a lot of different ways. Weaker payroll numbers signals more justification in rate cuts, because in the Federal Reserve's mind, right, if the labor market is weak, they need to cut rates to stimulate it, to bring it back in that regard, right? So they lower interest rates. This helps businesses take out more loans, expand, people spend more typically. It stimulates the economy in a lot of different ways by lowering interest rates. It can cause inflation though. And so, because of that, a lower, weaker labor report, weaker payroll numbers will signal more justification in rate cuts by the Federal Reserve. It's already at 97% though, so it's pretty much baked into the market already that we're going to cut rates on the 17th. The question is, do these numbers change that outlook? And I don't know. It could. They might not. I don't know. Yeah, hit the like button, guys. Hit the subscribe button. We do this live every day. Do it now. We got a little bit under 30 minutes left. We almost got 1,200 here already. Oof. Be ready, guys. This is a big report. It really is. All right, so Lutnick is still speaking on CNBC. He said U.S. economic numbers will get better after staff changes. Again, the BLS experiencing technical difficulties ahead of the non-farm payroll data. We're going to have it when it comes out here. Don't worry, but let's see. I think there's so many people tuning into this report. Roughly 25 minutes left. Yeah, Broadcom is up big. AVGO popping up this morning at 340s right now. And it's part of the S&P and the NASDAQ. Yeah, I mean, I show Bitcoin. We look at Bitcoin a couple times every day. Bitcoin at 112 is very strong today. MicroStrategy up. ETH is up as well, up to 4440. Let's see when ETH breaks 5. Gold is neutral, but it's been up for the last few days. Why is AMD and Nvidia not moving up with AVGO? Thoughts? Well, because AVGO is up from earnings and guidance, right? So Broadcom is up because of good earnings. Nvidia and AMD, while they do have sympathy movement, people are kind of, we're seeing like a small correction in Nvidia over the last few months, right? Nvidia's down from 185s to 169s right now. So we're seeing small corrections there. The bracket. Lululemon's down big on earnings. I'm not gonna say I told you so, but you know. Ugh. Ugh. I'm sorry. Oh my gosh, dude. I'm sneezing right now. I feel like I gotta sneeze again. Hold on. I'll be right back. Ugh. Ugh. Alright, I'm still here. Y'all are lucky I don't sneeze on the camera over here. Ugh. Alright, I'm okay. I'm alright, guys. Don't worry. Jack Harlow? Alright. NASDAQ ripping up. Let's see if we bounce here. We bounce at the 200 exponential at 782s. Yeah, the president's posted a couple different times. Sometimes sneezes just feel good, man. They just feel good. The worst thing is when you feel like you gotta sneeze and then it goes away. And you're like, what happened? Can't make it come back either. It's just hard to, figure it out. Yeah, I hear people talk about Open Door. Open's been running, man. It's been on a continued run. It's at 630s right now. Again, I don't know anything about this. It's not really my style of investments. I'm not really going to invest in it, but it's flying up right now. It's at 6. I'm not going to buy it up here though, but it's kind of like where you can trade home prices. All right, so we're under the 200 exponential, moving up. Very choppy range. Gold is pushing up ahead of the labor report. We're at 36.10s. We did get some updates by the BLS that said that they're reporting technical issues ahead of jobs data. They said its data retrieval tools are down ahead of the September 5 jobs report release. It hasn't indicated whether the outage will delay publication or not. And so, yeah, they're experiencing technical difficulties just 30 minutes before the jobs report is set to come out. Uh-oh. I mean, it's letting me in here. You know? Let me in here, but all right, guys. Yeah, mine shows fine. It says the employment situation for August is scheduled to be released today at 8:30 Eastern Standard Time. Prelim benchmark revisions for March 25 is scheduled to be released September 9th, 10 a.m. So we got the prelim benchmark revision again next week, Tuesday. 20 minutes, chat, 20 minutes. Higher or lower numbers here. We're going to end this poll. Are you bullish or bearish? And we're going to ask higher or lower payroll numbers. That's what we're going to ask here. Will NFP show higher or lower than the 75,000 expected? Higher, lower. The other question is, will we get revisions to this report, chat? Revisions are a big part of this report. It really is. Revisions are incredibly important. Revisions are important. So again, we got the non-farm payroll report but the BLS always revises the payroll numbers for the previous 2 months as more data becomes available, and these revisions can be more telling sometimes than the actual number of payrolls themselves. Again, today that number is expected at 75K. Big downward revisions can indicate much weaker labor market than previously thought, underlying trend that is initially reported. And so, again, it's important to watch this. And the reason for this is because it's surveys, it's incomplete responses. So the first jobs report is based on incomplete data, around 60 to 70% response rate from employers, because not all businesses report their payroll data promptly. And so there's 2 revisions that happen. And then next week, we got one of the annual benchmark revisions. Again, last report, we revised jobs down 258,000. If we take a look at yields are down today, signaling they expect weakness in the labor market is what I'm showing here. Like if we refresh this, look at yields. Although, yeah, yields are down still. Look at a 1-day chart. Yields are down just in the last like 5 minutes. Look at a 5-day trend here for yields. Look how much yields are down. And yields and interest rates follow each other. So this basically is betting on weaker labor report data today. These are dropping at 8:30. There's a timer in the bottom left corner of the screen, as well as a time, Eastern time. Goldman Sachs stated jobs could be revised to the downside of 55 to 95,000 if real ease. Expect a lockout rally at the bell. Maybe. Yeah, AVGO earnings are good. They're up. All right, so I asked these numbers. 59% think we're going to get lower than expected out of about 200 votes in 2 minutes or so. So 59%, almost 60% of you guys think we're going to get lower payroll numbers. And I think that's what the market is pricing in here. I mean, you can kind of see the same dynamic here with yields. Yields at 4.15%, which is pretty low versus what we've seen over the last, like here's, just to put this into perspective in terms of yields, right? Here's roughly the last 6 months. We haven't been this low in yields since March. Like we haven't been this low in yields since March, really. And so yields are low right now. Basically, they're betting on weakness. All right, guys, we got 15 minutes left. 15 minutes. Yeah, this is a big report. It's an important report for sure. You want to tune into this. Bitcoin is up. Again, we got 15 minutes. Hit the like button. Hit the subscribe button. Again, put it in 2x speed and hit the live button, and you'll make sure you're real up to date on the stream. We get another benchmark revision September 9th, so next Tuesday as well. Nasdaq's chopping sideways. Again, rate odds are still pretty elevated here. And it's a really interesting time because the president has been pushing for rate cuts, right? But Jerome Powell has been pretty hawkish. He kind of changed his tune during the Jackson Hole Symposium. But prior to that, he was really hawkish. Since then, though, we've seen some kind of interesting changes. We've seen some big revisions in the labor data. Originally, they thought May and June were strong. Both May and June originally were like 1-something thousand payrolls. Okay, they ended up revising them both independently down under 20,000 for both months. Right, so we got a big correction to the labor data for May and June, and a lot of people are worried we might get another correction in that today. Look at the Nasdaq push. Nvidia is starting to spike up, and so that's what you want to tune into. This is yeah, you want to tune into what we might potentially get here for revisions for the previous months as well. If we get more big revisions, a rate cut is all but guaranteed, I think. A weaker report could scare markets on the downside. It could also make markets move up because it means a higher chance of rate cut. So it just depends on, you never know how the market's going to respond in that context. You don't. It's a big report, though. It's not a small report. It's a very large report. So. What if non-farm payrolls is higher and Jerome Powell decides to increase rates? He wouldn't. He would just pause rates again, and I don't think that's very likely either. I think even if non-farm payrolls are high today, I don't think they're gonna, unless they're like shockingly high, like scary high. Like we've seen them sometimes where they were expected at 100 and they showed 250 or 260 jobs gain in that specific month, and so we've seen numbers come in like that, but it's more rare. And I think if we're just slightly more elevated than expected, I still think we're probably gonna cut. Although it might increase the odds to the downside, of course, for a cut. Next month report will be crazy with all the Fed governments being off payroll at the end. Yeah, maybe. Again, let me know your last minute predictions. What number do you think payrolls are going to show up as? What about unemployment? What number do you think unemployment's going to show up as? We got 13 minutes left, 12 minutes left. NASDAQ's pushing up though. Let's watch 23.8. ETH is pushing up. Bitcoin moving up as well. Gold is kind of stagnating here. SPY and Nvidia are bouncing back a little bit. You can see Nvidia start to rise back up to 170s here. AVGO is pumping up today on good earnings. C3 AI is, I think, pretty flat, but had disappointing earnings for a lot of people. Corrected yesterday to the downside. Negative 100K and 4.4 will cause chaos. Do you think we come in higher or lower? Bitcoin buy gold. Yeah. Yeah, weaker payroll numbers means higher chance of a rate cut. Yes, that's correct. Again, I think the big story is revisions today, though. I think the big story is revisions. And so I think that's the big story is revisions. All right, we're starting to head down here. All right, guys. We got 11 minutes left. 11 minutes left. Hit the live button next to the play button to put it in 2x speed. You won't be delayed. Yeah, I mean, they're expecting the U6 unemployment rate. Last time was 7.9%. So you can watch that. Again, the U6 data is the percentage of the total workforce that is unemployed or as well as like part-time. So people always argue that the reason unemployment is low is because of part-time work, but the U6 unemployment rate, when I give you a little look at that, last time it was 7.9%. And so it's basically gauging full-time employment versus part-time. Yeah, NFP can be negative. We've seen some of the prelim numbers, like ADP data showed negative 33,000 not that long ago. And so we've seen some of those numbers. Seasonal jobs are done. Yeah, maybe. Summer jobs. Yeah. Oh, sorry. Bumped my mic a little bit. I still think this mic is the most genius mic of all time. They're like, you know what? We're going to make your mic rainbow colored. And if you want to stop us, you got to download our software for it. So you can change the color. Genius. If you want people to download your software, that's the move, I think. 9 minutes, Chad. 9.5 minutes. NASDAQ's falling down, but we're very sideways. Very sideways. You can read about number expected at 75,000. 10 minutes, chat. 10 minutes. We got 2,000 here already. 10 minutes left. First month with the new guy who runs the department for the data. Do you think they're going to get weak numbers? or strong numbers because of that. You could argue both sides. I think you could argue that they'd have more of an incentive to give weak numbers to justify rate cuts, or they could want strong payroll numbers. I think they want rate cuts though. And so we'll see. 9 minutes. NASDAQ falling down, NVIDIA falling down. We got gold up on the right. We can put the dollar index up here if you want as well. Again, yields are super low today. They've been dropping for the last few days, of course, with people now expecting earlier cuts. Commerce Secretary Lutnick says need new tech and new people running the BLS. So Lutnick on the BLS said this just now. This is what Lutnick just said. Need new tech and new people running the BLS. It's time. Got some big reports coming soon. Yeah, so the BLS, it said they're experiencing technical difficulties and upcoming data may be delayed. Right? Bloomberg saying the same thing. BLS is experiencing technical difficulties. Data may be delayed. Ooh. Interesting here. Honestly, I think it makes this report all more interesting. We'll see, but yikes. I think it's probably, I don't think they're cooking the books here. What I think is there's probably so many people watching this report that their servers can't handle the traffic. Is probably what this is. Yeah. All right, I'm gonna put this up just because the BLS reported this. BLS is experiencing technical difficulties. Data might be delayed. We got 7 minutes left. Ugh. Let's see what they do here. 6 minutes. It's time. Yeah, I think there's just probably so many people looking at this report. Again, we're expected at 75,000 today. 75,000. Unemployment expected at 4.3%. 4.3%. We'll see what we get. We're going to report this as soon as we can, as fast as we can. We got exactly 6 minutes left. NASDAQ's chopping sideways. Looks like an M sign. We got the 200 exponential right above us. NVIDIA is down today. Gold is slight. Broadcom is up. I'm going to put the dollar index up here. I can also put yields. Dollar index is falling down this morning. Again, I'm on the site. It looks fine to me, but we'll see if they report it on time. Again, guys, 6 minutes. Six minutes, 5.5 minutes, really. Again, BLS data says delayed. Maybe. Maybe it's not. We're going to try to pull it like we always do. But just turn it off, turn it back on. Yeah, we'll see. Hey, 5 minutes left, chat. 5 minutes left. Will the data be delayed today, guys? Let me know in chat right now. Do you think the data is going to come out delayed today? We're on the site. We're waiting here. But do you think the data is going to be delayed today? Again, we had the ADP report come out a few days ago. This data showed 54,000 jobs weaker than expected numbers, maybe. And this is kind of seen as like a precursor to what the data might actually show. Somebody said yes. Yepers. Hey, thank you, Ed. Appreciate it, bro. Hit the live button next to the play button. We'll cover it as soon as it drops. But 2-year treasury yields fall to 3.55%, which is the lowest since April 7th. Lutnick also predicts better job number accuracy after the BLS firing. Yeah, Lutnick blames BLS issues on old leadership. Well, they're saying now that the technical difficulties might be here and that the data might be delayed now. So, 3.5 minutes, chat. 3.5 minutes. Flat numbers. All right, expected at 75,000. Again, previously the non-farm payrolls showed up at 73,000. Unemployment expected at 4.3%. Previously, it was 4.2%. Will we see fear in this report? Chat, 2.5 minutes left. Two and a half minutes left. Again, hit the live button. It's go time. Hit the live button. Nasdaq falling down here. All right, we're going to watch for revisions data as well. We're going to watch for updated revisions here to see if they're going to revise it down even more. We're going to watch for, obviously, the payroll numbers to see if we see weak signs, and that indicates influences yields, rate cut expectations, and more. So we're going to look at all this stuff, guys. Yeah, Lutnick blaming it on old leadership, but they're having problems today. They've come out with multiple different sources that said it was delayed. And again, we're going to see. We've got a bunch of different sources here too. Two minutes, chat. A minute left. Hit the live button next to the play button, put it in 2x speed. We got a minute left. 1 minute. $75K non-farm payrolls is the number, Rob. Is what's expected today. All right, guys. Hit the live button. Put it in 2x speed. I might sound like a chipmunk. This timer's pretty early. We got about 50 seconds left. 50 seconds. 45 seconds. Again, hit the live button. This is a big report, guys. They revised May and June down 258,000 last time. Today, they're only expecting 75K for non-farm payrolls. Last time, they showed up 73,000, so they're basically flat. Unemployment expected to uptick 0.1% to 4.3%. And there's rumors and talks of more revisions right now, as well as the BLS is saying that the data could be delayed today. So again, 20 seconds here, chat, 20 seconds. Here we go. Here's the report. Hit the live button next to the play button. Make sure you're fully caught up. Let's see what we get here. 10 seconds. Really about 6 seconds. All right, here we go. Here's the report. 2, 1. And here's the report. Okay, 38,000 private payrolls, non-farm payrolls, 22,000. 22,000 non-farm payrolls versus 75,000 expected. 22K versus expected 75,000. Unemployment 4.3%. 4.3% as expected. Bad numbers here. I told you guys. And again, we cover this as soon as it drops. 22,000 non-farm payrolls versus expected 75,000. 22,000 versus expected 75,000. The market does not like this at all. Again, we're going to read this report for you right now. The employment situation. Total non-farm payrolls changed little. 22,000 showed little change since April. The U.S. Bureau of Labor Statistics, the unemployment rate at 4.3%, also unchanged. The job gain in healthcare offset by losses in federal government and in mining, quarrying, and oil and gas extraction. It's presents statistics from monthly surveys, the household survey. Household survey, both unemployment at 4.3% and the number of people unemployed at 7.4%, unchanged in August. There's measures also changed little year over year. Among the major worker groups, the unemployment rates for adult men, 4.1%, adult women, 3.8%, teenagers, 13.8%. Among the unemployed, the number of new entrants decreased by 199,000 in August to 786,000, largely offsetting an increase in the prior months. The number of longer-term unemployed, jobless for 27 weeks or more, changed little at 1.9 million. Here, let me get some data points for this real quick. Let me get some data points. Give me 1 second. It'll be faster. But yeah, really bad revisions, or no, really bad labor. Look at gold spike on this report. Now, this might mean earlier rate cuts. Again, this might mean earlier rate cuts. Healthcare added 31,000 jobs. Job growth was mainly in healthcare and social assistance. The federal government continued to reduce its workforce, and average hourly earnings for private sector employees increased by 12% to $36.44. The employment numbers for May and June were revised downward again, indicating lower job growth in these months. And again, this means earlier rate cuts. Probably what it means. If you take a look at yields, this means earlier rate cuts. Almost certainly. Remember, we got this benchmark revision. Okay, so change in total non-farm payroll employment for June was revised down by 27,000 from 14,000. Hey, I love you, buddy. Have a good day, dude. And the change for July was revised up by 6,000 from 73 to 79. So essentially flat revisions. June's number was revised down by 27K, which is not necessarily flat, from 14 to negative 13,000, and July was revised up by 6K. But yeah, still a net negative revision here in these numbers. So again, revisions. Yeah, so revised down by 125,000 from the initial report of 144 to 19. This was what was showed last time. Again, market's liking this. Again, the change in total non-farm for June revised down by 27,000 from plus 14 to negative 13. The change for July revised up by 6,000 from 73 to 79 is the revisions that we see here. Again, we can take a look at yields. The Nasdaq's reacting favorably to this report, though. Let's look at the 10-year Treasury yield right now. Yeah, yields are down as expected. I mean, this showed weaker numbers like a lot of people expected, and yields are down to 4.11%. Unemployment was 4.3%. I'll put these numbers up on screen. But again, we showed 22,000 non-farm payrolls. We showed negative revisions for May and June again, and unemployment was at 4.3%, which was an uptick of 0.1% month to month, is what the data showed here. And again, you're welcome. We cover this as soon as it drops. Hit the subscribe button, hit the notification bell. We appreciate it. And again, look at yields fall. Interesting here. Nasdaq up. Again, I'll put the data on screen so you can see it. Hold on, I gotta find it. Yeah, so they weren't late though. They weren't late at all. This came out as soon as private payrolls 38,000 versus 75,000. U6 unemployment rate 8.1%. That upticked as well. And so, yeah, non-farm payrolls 22,000. Let me get all this stuff on the bottom of the screen. Manufacturing payrolls negative 12,000. So unemployment rate 4.3%. That's what this showed. Here's the data. You can see it scrolling on the bottom of the screen now. Yeah, what do you guys think of this report? Definitely not a good report. I'll put it that way. Definitely not good. But again, markets are interpreting it as good because it means rate cuts are almost certain at this point in time. I'm pretty sure. Right. Private payrolls 38,000, 75,000. Nasdaq likes this. Again, it means earlier cuts. Nasdaq's pushing. You know, it's also kind of a buy the rumor, sell the news thing. Like most people, if you looked at yields, right, most people were expecting the labor data to be revised negatively downward, which it was, as well as weak payroll numbers. I don't know if they expected them to be this weak, but this is already kind of baked into the reactions now. And if we take a look at the actual CME watch tool, let's see if this changed at all. Yeah, CME watch tool, you can't even look at it right now. There it goes. Yeah, 99% chance of rate cuts now. We're basically guaranteeing rate cuts now this month. 99% likely for rate cuts now. 1% chance of a pause. 99% chance of a 25 basis point cut. We don't have any odds for a 50 basis point cut. Maybe we will. But yeah, this labor report was not good. Gold is flying up. Yeah, gold at 36.34 is the all-time highs in gold. Love you. I thought I heard water spill. It's all good. Okay. All right. I panicked. All right. Love y'all. Yeah, I mean, we're almost certainly going to cut rates now. It's just obviously going to happen. It's just obviously going to happen. Yeah, so massive weakness in the jobs report. We got payroll fears and rate cuts are coming, I think. But the market likes it. Gold is up. Again, as I said before, we don't really know how the market's going to respond to this. Pretty much universally, this jobs data was bad. We should have been 22,000 versus expected 75, previous of 73. Unemployment was getting close to 4.5%. It's at 4.3 now versus expected 4.3. But the last time it was 4.2%. And so what this shows is that we're basically trending towards a rate cut, and the market kind of likes it because of that. Kind of likes it. It's up. It's up from this report, which is interesting, of course. We'll see if this nuance continues, but yeah. Yeah, so this report again showed weakness. I think June was revised upward, but May was revised down again to a negative number now in May. I think May was revised down from like the teens positive to the teens negative now. So May was, but I think June was revised up slightly by like 6,000, it said. So rate cuts for everyone. Yeah, Oprah's giving out rate cuts. You get a rate cut. You get a rate cut. I think that's going on right now. Rate cut odds are up, yields are down, which means means we're probably getting a rate cut in 2 weeks. We will see. Again, give me a follow on x.com at beginner trades. We post all of this stuff live. You can see we posted the payroll numbers here. We do this all live as it happens at Beginner Trades, BEGINNERTRADES at Beginner Trades. I appreciate it. We're getting a pullback. I might buy 23.8 here if we get it. Let's see. I'll try. I'll test it out. Maybe the first move is the wrong move. It's possible for sure, but let's start to buy in here. Way too early. Or late. Or green. We're just gonna fill some of this gap. I'll keep buying into it though, but it might keep dropping here. I'm gonna take one more position here. All right, we're up. We get filled up there. Okay, we got filled one. That's cool. We filled another. And another, and another, and another. Give me fill. Give me the last fill. Come on now. We're green on the day now, which is good. We made our money back that we lost this morning. I appreciate the follows. We got a couple people that follow me. I appreciate you guys. Thanks so much. It's bullish because the market wants rate cuts. Sometimes the first move is the wrong move, though. Wait, let me get this limit sell out the way. Sometimes the market wants rate cuts, though. And I think that's what we're seeing reflected in the action here this morning, is that this means this is basically set in stone that we're probably going to cut rates. Yields are now under 4.1%. And again, we can kind of see yields pricing this in. If you look at a 5-day chart here, look at how much yields have dropped just based off of like the last few days. So yields are moving down. People were betting on a weaker labor report, and it was probably weaker than expected, so yields are coming down even more. But yeah, yields are at their lowest level in what, 6 months? It just shows that we're pretty much certain going to cut rates now. It doesn't mean it's not. There's always variance. Nothing's absolute. We could certainly do anything. Next week we got CPI inflation, PPI inflation, and the last PPI inflation report was bad. Also, guys, if you want to help support the channel, check out Top Steps Funded Account Program. They're a sponsor of mine. I'm biased, of course, because I get paid by them, but genuinely useful for traders. Most day traders lose money. I thought I was going to be rich. Instead, I lost thousands of dollars as a brand new day trader. It makes no sense to fund your own account thousands and thousands of dollars. It genuinely makes no sense. You're probably going to lose it. Instead, Top Steps base one's $50 a month. They give you a 50K demo. If you pass their test, they fund you 50K, 90% split, and prior to that split kicking in, you get to keep your first 10K in profit. And so it's similar to funding your own account. If you fail, you lose $50. It's not the end of the world. It's the best of both worlds. It's a perfect way to learn how to day trade. They have some of the best rules in trading, funded account programs. No PDT rule. Get you around the PDT rule as well. They pay out millions, fund thousands, zero commission on Top Step X, and they're back to funded. Allows you to reset a funded account basically now as well. So a lot of cool stuff going on there. I'll put the link up. Great way to help support the channel. Understand all this stuff on screen. I don't even claim to be a good trader. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. I can't guarantee anything. I'm biased. Top 3 most biased ever. Don't copy me. Gold, spike it up right now. Gold, spike it up. But if you want to check it out, I'll put the link up in the chat. Great way to help support the channel. Overall bearish this morning. Do you guys think we'll turn? Let me end this poll. We asked people whether we would come in higher or lower here. Again, so some people, let's see what the bet is. So do you think, does the market, let me think of a good question here for the poll. Does the market continue moving up from weaker payrolls or turn to the downside leading into the open? Continues up is going to be one option. Turns bearish is going to be another option. All right, so there's the poll. Vote on the poll right now. Look at that 825 level. Let's see if we pull back a little bit here. But this is getting bought up right now in markets. Nvidia is falling down on this report, though. Dollar index is weak on this report. Again, vote on the poll. What's a high unemployment rate? I mean, 5%. I think the middle ground number they usually use is 4.5%. So, looking at our poll number, we're pretty split down the middle. We just got 300 votes. We're pretty split. 54% think we continue up. 45% think we turn. Thinks it turns bearish. Well, the bulls are bear win. Let me know. I don't know. We'll see. Nasdaq's getting higher here. Watch 850s above us, though. 850s. We're green on the day. Small green, but green. What's crazy is that the last time we had bad numbers, the market reacted positively to it too. Even I think the last PPI report. showed a positive reaction somehow. So it kind of does show the dynamic of buy the rumor, sell the news. It does kind of show that dynamic here, but we will see. Again, they did revise jobs for May down again, and they revised June up slightly. It was still a net negative. They revised May and June, or they revised May, I think, down, what, 30,000 or something like that? 33,000. And then they revised June up 6,000, I think. It was 6,000. So still, their net mid 20,000s down in terms of revisions from this report as well. So yeah, manufacturing jobs fell by 12,000 and are now down by 78,000 over the year, according to the non-farm payroll report. Odds of a September cut are up to 99%, and I think maybe that's why markets are reacting positively to this. Maybe, maybe that's why markets like this so much. I don't know. Let's see if this holds. Again, we'll see if the poll is correct. 60-40 now. I think the market's going to continue up. Yeah, Broadcom ripping up on good earnings. Yeah, I'm showing odds of a rate cut are now what? Okay, look, now there's a so yeah, so they did open up odds of a 50 basis point cut. So we now have 2% chance of a 50 basis point rate cut in 2 weeks. Again, we now have a 2% chance. It's still pretty improbable. But now there's virtually no chance of a September cut, or a September pause, I mean, like there were 30 minutes ago. Nah, bro, we still got 40 minutes until the opening bell, dude. Payrolls just came out. Markets are still digesting it. So, AI-related stocks need a breather. Capital may rotate into the Dow. Yeah, for sure. I think they need a correction. Corrections can be healthy in AI. You know, they really can be. And so corrections can be healthy. Goldman Sachs says buy the September dip, according to a Goldman Sachs trader. Not Goldman Sachs themselves, but one of the traders here. I'm not saying I agree with him. I'm going to preface this. I'm not saying I agree with him. Goldman Sachs macro trader Powell Shiavon advises buying September stock dip, predicting S&P could climb 67 to 6,900 price as rate cuts boost growth. In a note issued before the latest jobs report, he said markets are already pricing in a Fed cut that will spur economic reacceleration. August job growth was just 22,000 versus 75,000 expected. Unemployment at 4.3%. The weak data pushed the dollar lower, yields down, and stocks higher. Giovone sees the Fed's long-term run rate at near 3%, similar to the ECB, and expects stretched valuations in credit and equities to persist. He recommended owning rates volatility, buying equity dips, and watching NASDAQ and Russell indices for signals. You guys agree with that? The market's kind of, NASDAQ up a little bit on this report. NVIDIA is still down net, I think, from this report, but starting to rebound back up. Gold is elevated, certainly, from this report. Yields are certainly down from this report as well. So, non-farm payrolls. All right, we're creeping up to the, is this highs of the day? Yep, we're creeping up to highs of the day now. We're right at highs of the day. Let's see if we get a relief rally here. Only problem is that rate cuts done because of bad jobs data are not the good type of rate cuts that will move markets up by a lot. Yeah. It's a small rate cut as well, is what we're pricing it at 25 basis points. 0.25% is what that is. What do you think about Adobe? I think Adobe, I've said this once, I like Adobe as a company, but I'm not buying it for a couple of different reasons. The first main reason is that I think AI, even if they've ingrained themselves into AI use, right? They like, you can now use AI with Adobe in a lot of different ways. Photoshop use is going to decrease from AI. It's going to decrease, right? When AI can build those things and do those things themselves now, creative works like that are going to decrease. And I think that means, I think Adobe's still going to be fine as a company, but I think I'm not necessarily as optimistic as of their price going up substantially because of that dynamic changing from AI, right? So I think Adobe's still going to be around as a company. They're still incredibly valued. NASDAQ just broke highs of the day. We're up to 850s right now. So I think Adobe's still going to be around as a company, but they're going to lose some business from it, of course. They probably already are. NASDAQ pushing up over 850s here. Yeah, Lululemon down big today. They're still down there 165. So what a big percentage drop here, dude. Y'all never hear the end of this from me. I called it. You'll never hear the end of it. All right, we're at 850s. Let's see if we hold support here. I'm not really wanting to buy this here. I think it's too optimistic and too up there. Maybe we get a pull back to 825s. I'll consider it. Well, we get some volatility this Friday. I'm hoping we do. Why is crypto? You would assume crypto would respond positively, and it is. Bitcoin's up from this report. Actually, no, it's not. It's about flat, but isn't it altcoins that are going to benefit from easing cycles? Not necessarily Bitcoin itself, right? Total 50 basis point cut by October 29th is now 78%. Yeah, so if we take a look at that, we can take a look at it. Again, at this point, we got a 2% chance of a 50 cut. It's still only 2%. But if we look at October's odds here, 78% chance of a 50 basis point cut by October now. 78% chance. It'll probably be 25-25. So people are betting on the start of an easing cycle and a consecutive easing cycle. Sometimes they'll skip one, they'll ease. Or sometimes they'll cut rates, skip a meeting, cut rates again. Essentially 3 months later. But traders are in yields and bond markets are pricing in consecutive rate cuts, 25-25. Yeah, crude is down. Look at crude dump. 62s. All right, we're at 862s right now in the NASDAQ. NASDAQ's pushing up. Oil's dropping. Bitcoin's basically flat. You can look at yields. They're down significantly. This is basically yields. You move if you want to see where yields are, you just move this over 1 decimal point. So it's 4.086%. Yeah, oil's down because Saudi Arabia wants OPEC Plus to speed up its next oil production increase, according to Bloomberg. Thank you for the insights. Hey, you're welcome, man. Appreciate it. Y'all hit the subscribe button. We do this live every single day. We don't sell a course. I don't sell a service myself. I have one sponsor, and I tell people I'm pretty biased in their favor, of course. Everything we put out here is free. We cover the data as soon as it comes out, as you guys saw at 8:30 today. Subscribe. You know you want to. Try it one time. We'll see what we get. I'm curious to see what the opening bell brings. Again, unemployment rate, 4.3%. It's the highest since October of 2021. Somebody's saying a 12% chance of a... Has this changed that much? We got a 12% chance of 50? No, we got 2% chance. Not 12. Again, yields are falling though. Opening bell is in 34 seconds. Hey, thank you, Wander. Appreciate it, brother. Thank you, sir. Next inflation data is next week. We get CPI inflation data next week on Wednesday and Thursday. Oil is basically rebounded all the way back up, though. Look at oil come back here. Oil just got bought up. Yeah, last PPI was terrible, too. Last PPI was bad. It was not good. Google green on the day now, technically. We're consolidating right around 870. Oil's fighting its way back up. You can see Nvidia here has been climbing back up the last few minutes, but the last like 5 or 10 it's been dropping back down some. Oil bouncing back. Gold's still elevated, of course, from this report. Weaker labor is going to make gold spike as people fear and move to those type of markets. Yeah, 34 minutes. I'm sorry, 33 minutes. Chips have been down for the last week or two. People are worried about overvaluations in bubble territory for chips. We've seen a lot of that. A lot of news come out for them as well. Yeah, well, Broadcom is up pretty significantly here. So like Broadcom is up big on the day from earnings and guidance numbers. So Nvidia is down on the day technically. So it's not influencing Nvidia as much as people want it to regarding Broadcom and in terms of maybe competition, sure. Yeah, that might be true regarding Broadcom taking away here. Yeah, market's up on rate cuts. Odds swinging up is what this is. Yeah, Baba's gotten pumped up, man. Alibaba has gotten ripped up here from the last few days. ESM, yeah. They're doing good too. They're up to almost 240s. All right, we just broke highs of the day again in the NASDAQ. We're still heading up. We got 30 minutes until the opening bell. 30 minutes. Google's still pushing up at 233s. We're going to day trade the opening bell live as we always do. Chat, right at 8:30, so stick around. Yeah, I'm looking at other reports of stuff coming out, but Bitcoin hit 113s. Again, 2-year treasury yields fall 10 basis points to 3.48%. Interest rate futures price about a 10% chance of a 50 cut. Vital Knowledge says the Fed would cut 50 basis points if not for tariffs. So Adam Crisafulli says weak labor data, BLS, EP jolts, ISM, and Challenger job cuts supports Fed easing. Without tariff-driven inflation risk, the Fed would cut 50 in 2 weeks and 25 the next 2 meetings, which is what they did last year. Last year, that's what they did. Instead, investors should expect 3 25 basis point cuts totaling about 0.75% this year. So markets are reacting favorably to this outlook. Yeah, next week's PPI report. The last PPI report was absolutely horrible, chat. So the last PPI report was not good at all. It was almost 1% month-over-month growth in inflation for wholesalers. So it was not good at all, right? So next week, we actually have PPI first before CPI. NASDAQ still breaking highs. And so next week will be a really interesting dynamic, 8:30 on Wednesday and Thursday. And again, we'll stream it just like we stream this. It'll be really interesting to see what we get there. Because, yeah. Yeah, I mean, Broadcom, more diversified business through a combination of in-house development, strategic acquisitions. They have traditionally been in networking hardware such as switches and routers, as well as connectivity chips for a wide range of different devices from smartphones, modems, so forth. But they have the acquisition of VMware. They become a major player in infrastructure. AI hardware is still, like, they're rivals with NVIDIA in that context. With regarding Broadcom, AVGO. Maybe that's why NVIDIA's down and Broadcom's up today. But NVIDIA's been dropping for weeks. Again, vote on the poll. Do we hold? We got 800 votes. 61% think we continue up today with these rate cut odds. Yeah, Bitcoin starting to ease. Tapped highs a couple minutes ago. It's still getting up there. Almost to 114s again. So Bitcoin's getting up there. False hope day. Should we cut rates 50 basis points next meeting is the question. I don't think we're going to, just to clarify. But should we? I don't think we're getting anywhere close to record highs today. Not in stocks or indexes. Maybe what's the SPY all-time high? SPY all-time high. Well, I guess the SPY is actually already at all-time highs. Is it? I think it is. Yeah, SPY at all-time highs right now. If we open up right here on the SPY, we're breaking all-time highs. All-time high 649.48. We are technically at 651.90s. Crypto needs quantitative easing. I don't think we should do QE at all. QE poses the largest risk to inflation spikes versus most other things, right? I don't think we should do quantitative easing at all. I think we can end QT. If you want to do a dovish thing there, you can end QT. And if you want mortgage rates to go down, you can end QT and MBSs. I think that's fine. I think you can cut rates 25 basis points. I think that's fine. I do not think we should do QE. QE is a form of money printing where the Fed creates online bank money and then buys up a bunch of bonds and MBSs, injects liquidity, but it causes inflation. I know Bitcoin people want like QE, I get it, but what's the point if inflation for the whole world spikes just so Bitcoin can go up? You know what I mean? You gotta have more patience with Bitcoin from that, I think. Like, we shouldn't spike inflation just to make Bitcoin go up. That's dumb. You know what I mean? Yeah, we're still ripping highs right now. We're at 23,890. Will we break 24s today? Because it makes me a lot of money. Hey, I get it, bro. Listen, I understand. But it's going to make everybody else's money less valuable. And so, as no bueno, you know. All right, we just broke highs again. These are just levels that I have on my charts that I like, but I wouldn't say they're key. They're just kind of short-term support and resistance levels. Basically, I'm trying to predict bounces and dips off of these levels. But sometimes if we're strong enough, we just kind of rip past them is what it is. All right, guys, we got the opening bell. 24 minutes. 24 minutes. We're going to day trade live at the opening bell. Hit the subscribe button, guys. Do it now. We do this live every day. Big week jobs report today. Again, we showed up at 22,000. Much weaker than a lot of other people expected. It says the SEC and the CFTC explore regulatory harmonization beyond crypto. What the heck does that mean, bro? What a vague statement. Regulatory harmonization beyond crypto. Hey, John, are you teaching your kids? I mean, I'll probably start teaching my son. My daughter has no interest in learning. She doesn't care about any of this stuff. All right, SPY still around all-time highs. Let's watch 23.9s. Let's watch 23.9s. My son is interested in it. But we'll see. You know. Yeah, we're at 23.9s, almost at 24s on this data. A lot of people seem shocked by this data. We asked the poll, we got almost 1,000 votes. 61% they think we continue up after this weak labor report. 40% think we reverse. Short squeeze GameStop. Yeah, GameStop earnings next week. We'll see. Bitcoin up. Buy up to all-time highs. Actually, Bitcoin just pulled back a little bit, actually. It's close to flat from this report now. Again, next week we got CPI, BLS benchmark revisions on Tuesday. CPI or PPI on Wednesday, CPI on Thursday next week. So we got more revisions potentially coming next week in the labor department. So just be ready for that because that certainly could be happening next week. It depends on why they're cutting rates, StarCraft. So StarCraft says, hey, John, doesn't rate cuts usually trigger a recession? Or, I'm sorry, a correction? It depends on why. They can, certainly, but it depends on why. Yeah, there's 23.9. We're seeing some tech pullbacks as well. Nvidia's starting to bounce back up though. Gold's consolidating here. Isn't CoreWeave not quantum? Isn't CoreWeave just AI related, not necessarily quantum? Y'all can correct me if I'm wrong, but I think CoreWeave's just AI. Quantum is like Rigetti, RGTI. There's a bunch of other ones. QBTS, right? All right, let's see if the market pullbacks and holds. We got less than 20 minutes until the opening bell. Yeah, so we had non-farm data. Again, showed up very weak. Very weak. Yeah, let's watch 870s. We got 880s right here. It could bounce too for sure. I'm here for Christmas music. You're not going to hear any today, I don't think. Any chance of ETH falling back to 4,400? I mean, there's always a chance. As for whether it does, I don't know. You know. You know, the president did announce a Japan deal this morning. 15% universal, basically, on most goods, I think. Not universal, but on most goods. AVGO holds. Yeah, AVGO is up on earnings, right? Earnings and good guidance. But they're up a lot. So we'll see, but they're up a lot. All right, so we fell down to 75, which is kind of like a $0.25 level. So you're saying there's a chance. Yeah, Macy's has been running up too, hasn't it? I don't really like Macy's long term. I think they're going to fail, obviously. I think it's one of the more obvious signs that Macy's is going to fail, you know. I don't know when it's going to be. It might be in 20 years. But I think eventually technology is going to evolve past needing to go to department stores to buy most of the stuff they sell at Macy's. I think we're going to see more specific, like, clothes-only stores. Or maybe Macy's will change the dynamic to... You know. Hey, thank you, Rusty, for the donation. Good morning, John. Thumbs up, fellow trader. To get out of my short position, one thing I'm certain about nothing in this market. Yeah, that's probably right. These are all self-drawn support and resistance areas. Sometimes they do really well, other times they don't, but it depends on volatility. Yeah, I mean, the only thing I could think of, like, of a bull argument for Macy's, and I don't necessarily believe this, but I think you have to kind of do these thought experiments and look at both sides, regardless of what your bias is. Macy's could succeed. I mean, you got to look at it like, okay, Macy's is in malls. Malls need big stores, you know, to bring people in. Macy's generally still has a decent amount of people every time I go there. I don't think people buy things a lot of the time from Macy's, but I think they walk around and look at stuff too. And so Macy's has got a shot. I mean, they could succeed. I don't think it's going to last forever, though. I think within 20 years, probably, you're gonna start to see like a JCPenney / Sears dynamic in Macy's. But there's a chance. I don't know. I could be wrong. Have you looked at Lulu? Yes, I've talked about it over and over again because I was right. Yeah, I don't think Dollar General is going to succeed. The only areas in the country propping DG up is like really small country towns, and eventually as Amazon warehouses get closer in proximity to those towns, people are going to need to go to the dollar store less, as well as the older generations are usually the ones that shop at dollar stores more often. And so as they age, you know, they're going to stop wanting to walk around in those stores, and we're going to start to see less and less Dollar General and Dollar Tree sales moving forward into the future. Now, it could last a long time, right? Like, they could survive for a long time, or it could be next year. I don't know. All right, so Nick Timiro said weak hiring this summer will make it easier for the Fed policymakers to agree on a 25 basis point cut at their meeting in 2 weeks, but further muddies the debate over the pace of cuts after that. Horseshoes have got a big future, though, big. I mean, you're way off on Dollar General. Their prices are way lower than Amazon. Yeah, but you got to drive there, bro. Listen, it's a lot cheaper to go buy your food in store, drive to the restaurant, and buy your food there. But how many people DoorDash every freaking day? It doesn't matter what's cheaper. It matters what's more efficient for people in a lot of different ways, right? And if you got to spend $5 in gas, $10 in gas to go to the dollar store to save $2 on a product, who wins there? You know, is it really net justifiable? I don't know. All right, Hassett said on the U.S. economy, says they have to look at whole portfolio of numbers. Jobs report a bit of a disappointment, according to CNBC. Yeah, drone deliveries, certainly the future, I think, of deliveries as well. I think we're going to see that more and more over the next 10 years, probably. All right, guys. Hey, we got 12 minutes. 12 minutes. Let's see if we get at the opening bell. Yeah, or you make your own food. But the point is, people don't want to drive to the store. And again, as younger generations are raised more on ride sharing or not ride sharing, on deliveries, they're going to want to go to dollar store less and less and less, right? They're just going to order stuff from Amazon. Free shipping compensates for it. Like, they're just going to buy bulk stuff from Amazon or Costco. They're not going to go to the dollar store anymore. Drones are going to start delivering things as well, more efficiently and cheaper. People don't want to do anything. Yeah, I mean, that might be true, but that's been the dynamic change of technology throughout history of the last 100 years, right? Look at 100 years ago, right? Look at 120 years ago, right? Prior to the automobile, people used to ride on carriages. You know, they used to walk places, ride on horseback. You know, I'm sure when automobiles came out, people said the same thing. Oh, people don't want to ride on horses anymore. What's the world coming to, right? It's the natural evolution of technology. The whole business of business is to solve a problem. People don't want to walk everywhere. Now they drive. People don't want to go to the dollar store. Now it gets delivered, or they order it from Amazon, you know. And so you got to look at certain companies that go obsolete in those periods of time. Again, I've said this before, but I'm sure carriage makers in the early 1900s, you know, rebelled against the automobile, right? Was it worth it? No, because the automobile was the future. And so you got to be objective about it. There's certain companies that are just going to go obsolete. And, you know, maybe if you can pick them out, you'll find some good short positions. I don't know. I'm not really telling you to short them. But I think you got to look at objectively right in the eyes and see what it really is. And maybe I'm wrong. I could certainly be wrong. Maybe Dollar General thrives over the next 20 years. I think that's a pretty low probability of, like, base case there. I think that's pretty low. I don't think that's going to happen. But maybe it does. I don't freaking know. Macy's goes first for sure before Nordstrom. Nordstrom is still kind of busy every time I go there because they sell makeup and stuff. And so if people don't want to go in Sephora because it's like a freaking makeup rave with lights and smells and it gives me a headache just going in there, you know? They just go to Nordstrom instead. Yeah. I mean, I wouldn't say Bitcoin is flying up. I mean, it's up today for sure, but since the payroll numbers, it's kind of flat. I don't know, bro. As a husband and a father to a 16-year-old, I know about makeup stores, okay? You got, I think it's Ulta, which is more chill. It's usually a little bit larger. The lights usually aren't as bright in there. They still got aggressive salespeople trying to, you know, sell you stuff, but it's more chill. Then you got Sephora, and I might have these backwards, which is usually in the mall, much smaller area. Super bright lights, mirrors everywhere. It smells like perfume constantly. There's too many people in there. It's stressful. I just don't like it. And again, y'all can correct me if I'm wrong. Maybe I'm getting these mixed up. I don't know. But some of you guys know what I'm talking about. Yeah, brick and mortar is yeah. I think brick and mortar is going to see more and more. I think they're the only brick and mortar stores that are going to succeed long term. I think hardware stores specifically, because contractors need that stuff same day, and a lot of the time you have to buy big things at like Home Depot. You got to buy grills, you got to buy wood. You know, these are not things that are efficient to ship, and so I think Home Depot, hardware stores in general, are probably going to be more resilient to this mail order dynamic I'm talking about. But you never know. We could have some other technology that ships wood out. I don't freaking know. But I think they're going to be more resilient. I mean, people vote for the Bulls. I wonder how many of them would actually bet money on it. I went long for a little while, but we're mostly chopping sideways. 62% of the poll thinks we're going to go up. Google bouncing right now as we speak. SPY's at all-time highs. If it opens up here, it'll be a new all-time high on the SPY after really weak payroll numbers. Might seem contradictory, but I think the market wants rate cuts. Stimulative, but... Yeah, and I think people have a lot of confirmation bias regarding brick and mortar. Like, they have fun memories of going shop at stores with their family, and so they don't want to believe that dynamic is going to change. It's kind of like Blockbuster. I love Blockbuster, right? But Blockbuster is just not a viable business anymore. That's why they all closed down. Because I can order the same movies in 30 seconds on my TV now versus spending an hour going shop for movies. Nostalgic? Sure. Justifiable business right now? No. Same thing with brick and mortar. Nostalgic, you know, is it an event that you can do with your family? Sure. Is it a justifiable business? For a lot of stores, no. All right, so we bounced right off at 870. Let's see if we hold. Yeah, the Fed rate odds right now have changed all the way to, we got 50 basis point cut. 12% chance now. Look at this. 88 to 12% chance of 50 basis point cut. It's still not high. The only thing that'll make this go up more is if we get low inflation data next week. We also have a benchmark revision to labor data. Look at that 870 level. Top 3 levels of all time right here. Look at this level. Yep. Some would say that's the greatest level ever right here. Let's see 23.9. I think 23.9 is like a big psychological level. So we'll see if that holds. Yeah, Broadcom up. Broadcom is up big right now. And I told you guys the case in which we might get a 50 basis point cut. We need to see really weak labor data, which we got. We need to see low inflation data next week. And we need to see a big revision in the benchmark data on Tuesday next week as well, right? Those are all the things that might push us towards a 50 basis point cut. I still think we're probably going to get a 25, but if we got the perfect storm, we could get a 50 basis point cut. White House economic advisor Hassan on the economy says they have to look at whole portfolio numbers. Okay, this came out already. But older people enjoy the social aspect of shopping. Don't think in the future old people will only DoorDash. Yeah, but the dynamic you're missing is that in the future, the old people are going to have grown up on DoorDash, right? Like, you have to think about it like this. Why do old people like shopping in stores now? It's because that's what they did growing up, right? Instead, that dynamic is going to continuously change as people age, right? But the people aging and that are turning into the older population are going to be raised on that delivery dynamic, much more so than previous generations. And so with that, yeah, it's not going to be the same. It's not going to be, it's not like old people just like go and walk around in stores. Maybe they do, but they like it because that's what they did growing up and that's what they're used to, right? But as generations become more and more technologically enwrapped in everything, they're going to like shopping in stores less, even if they're old. Anyways, we're right around highs. Nvidia's falling down at the opening bell. Look at Nvidia down to 168 right now. Broadcom is up big. All right, we got 1 minute. 1 minute to the opening bell. Yeah, I mean, we're probably going to get 75 basis point cuts this year, which is 0.75%. The question is, in what numbers will it show up? Will we get 50, 25? 50, skip a meeting, 25? Will we get 25, 25, 25, which is what a lot of people think? But a lot of people are betting on a September, or on 0.75% cut this year. All right, guys, 25 seconds left. All right, here we go, guys. Here's the open. Will we get 25 or 50 next meeting? Pretty probable 25 still. All right, here's the bell. All right, there's the opening bell. Here's the bell. 15 seconds into the open. We're getting some bullish action here. Again, the SPY, I think, is at all-time highs this morning at the opening bell here. Let me check. Yeah, SPY at all-time highs. So SPY just broke all-time highs at the open. I'm old, bro. I'm top 3, oldest ever. All right, NASDAQ still pushing. Nvidia dropping. All right, getting some rebounds here. Nvidia down at the open, but the SPY is bouncing back here. Nvidia dumping down here. Google ripping up. Nvidia at 165s right now. Well, we see a correction now. Here's 850s. Bouncing right at 850s. Look at that. Look at that level. That means it's gonna hold though. The question is Nvidia. It's too early for me to trade. I need to wait 2 minutes first. Bitcoin pushing up at the open. Google pushing up at the open. Hey, we're pretty green on the day. Marvel up again. All right, here we're under 850s. Here we just tapped 850s again. Top 3 greatest level. Look at that. And maybe not. Now we just broke underneath it. Back up. Still holding there. I think we want to break down here. Let's see if we do. But you never know. $870 still holding. Nvidia bouncing back here. Maybe we start to get a rebound. We got to watch the SPY in Google here. It looks like the market wants to break 23.9s, but we also had like a strong move on the upside here. Pretty big correction to the downside here. Look at this. I'm going to try buying this a little bit right here. Let's see if we get a pop, but risky. There we go. I'll show you this account. We're up 25 ticks right now, but we're going to hold it pretty much break even here. There we go. It's not holding that downward push. We're green, but it's not really holding this very well. I think we want to move back up there to test 23.9. Maybe we shouldn't have cut it, but it's all right. I'm going to try to buy this down here and maybe add 2, and then we're going to leave just 2 up here. It's definitely a little early for me to trade, but I don't like this at all now. Yeah, I'm gonna have to cut it too. Too close to the opening bell for me to be traded. I mean, we're down on the day, but it's not the end of the world down. Okay, so the market's actually starting to react negatively to this. But let's see if we get bought up and start testing that level up there. Still breaking down. We got the 200 exponential below us here. Maybe we'll start targeting that. The pop. Let's see if we actually hold up here though. We haven't really held any bounces that we've gotten. Coming back down, correcting some of these opening bell gains we've gotten. The current administration plans for PEPFAR to distribute Gilead's new prevention drug, according to a State Department official would say. Why not? Why not? I tend to think we're going to come back up and retest 23.9s. But I could obviously be wrong. But for whatever reason, that's my thesis on the day. It is Friday. Hey, nice. It is Friday. Yeah, you got to just be careful today, guys. Google up to 235s. Nvidia's already down a lot. If that starts to run back up, it could help things too. And so I don't know. For whatever reason, I think we're going to rebound back up and retest 23.9s. But I could be wrong. Not an investment professional. Not liable if you lose money. As well as like a lot of the bounces we're getting are not very follow through. Like they're just not following through like you want them to. Like every time we get a bounce, we end up coming right back down like pretty quick. Let's see if we run back up to 850s, but we're just not really holding this. With the 200 exponential, that might give us a little pop. If we bounce up to 850s. We're at that 200 exponential, but if we break underneath it, we could squeeze down quick. So just be careful. We're kind of holding it now, though. All right, so we just went right up to right around 850s and then retraced. So we're not really holding very long right now. Google just broke highs at the day, though. It's at 235s right now, 235s. Gordon Ryan versus Tom Aspinall in MMA. It would never happen, but Tom would destroy Gordon in MMA. In jiu-jitsu, Gordon probably win, but there's 850s. Hey, thank you. Again, remember, guys, I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. I can't guarantee anything. Be safe today, guys. It's Friday. Understand all the stuff on screen. I don't even guarantee to be I don't even claim to be a good trader. Don't copy me. But if you want to check out Top Step, a great way to help support the channel. It limits your risk. People complain. Most of the time, they just lose money and they're mad and they want to blame somebody. The reality of it is, most day traders are going to lose. Doesn't matter what course you take, who you follow, where you trade, you're probably going to lose day trading in the first few months at least. And so why risk your own money doing that? It makes no sense. Why risk thousands and thousands of your own money to do it? It doesn't make any sense to. Top Step, base one's $50. You pass the test, you get a 50K funded account. 90% split is similar to funding your own account in that context. If you fail, you lose $50 for the combine. If you activate it, it's about $200, but it's still noticeably cheaper than it would be to get exposure to, you know, real money and depositing that. And so it just makes sense. It just makes sense. They pay out millions, fund thousands. They recently did their new back to funding offer, which lets you reset funded accounts as well now. Really, really useful. Allows you to reset it up to, I believe, 2 times. For, up to 7 days after you lose your funded account, you can reset it for up to two times. Great way to learn. Beautiful way. I'll put the link up one more time. They're a sponsor of mine. I'm biased. I get paid by them. So definitely biased. But if you want to check them out, here's the link. Genuinely useful. Genuinely useful. The Senate Democratic leader Schumer says the Democrats will force votes in the coming weeks in order to reverse the president's import tariff, citing the BLS non-farm payroll report as justification. We did bounce right there at 825, and we are heading towards 23.9, which is what I thought we would do. So just a little bit early in my trades today, but that's all right. My thesis was mostly correct. I just kind of got scared out. Real estate investment trusts, probably Pew. Just because, you know, mortgage companies are going to do better with lower rates, as well as prices might increase in real estate in general. So it's good in a bunch of different ways. But I don't know for sure. My license isn't active right now. It's inactive in real estate. So not a real estate professional. Top 3 least real estate professionals in the world right now. Google pushing up though. How do you chart your levels? Always mad accurate. Confirmations, support and resistance confirmations, whole dollar numbers, psychological milestone levels. But unemployed, bro. I pay more taxes than most of you guys here. Let's just be real. Last year I've paid hundreds of thousands of dollars in taxes over the last few years. You're welcome, okay? You're welcome. Top 3 most taxpayers in the world right now. Look at my crawfish mug. I know. All right, the president said he is expected to announce an executive order potentially as soon as Friday, which will establish a designation for state sponsors of wrongful detention, according to CBS. I got a CPA, but all right, let's watch 850, see if we bounce at 850. John's water bill is higher than some of y'all's taxes. Let's take a look at my water bill. You want to see it? Hold on. Bull or bear on my water bill today? Take a peep at it. Woo. Oh, man. I'm telling you, bro. My wife, the plant murderer, sets up these super sophisticated watering systems in our house. And the water bill is feeling it right now. Cheers to my water bill right now. $1,000 a month for water. It better be some high quality H2O. You know what I mean? Because $1,000 is freaking ridiculous. I don't even like looking at this number. I'm telling you how, guys. Listen. I'm telling you exactly how. My wife, affectionately referred to as the plant murderer, will set up these sophisticated water systems and then just not, you know, pay attention to the plants for months. And we literally had a geyser in my backyard, like a literal 6-foot tall water spout in my backyard from one of her sprinkler systems. You know, I love her. I accept it. I allow it, but it's fine. Yeah, too bad it wasn't oil, for sure, you know. I probably still wouldn't own the rights to it, somehow. Alright, guys, we're retracing back down here. Let's see if we start turning back red here. These are two pretty big upwicks, which can sometimes signal selling pressure. But you never know. This is just choppiness right now. We're not really making any big moves either way. Yeah, start a GoFundMe. That's what I should do that, you know. Gold, rip it up. 3650s. So gold's breaking all-time highs. 3650s. New all-time highs for gold. 3650s. Market's been flat the last few minutes, so I'm just gonna wait, I think. What a crazy stream we got today, though, man. We had almost 4,000 people here for payrolls. Nasdaq starting to push. SPY rebounding back up. Yeah, and the thing about the geyser is that we have 2 German Shepherds, right? And that's like their play area. They like play in the backyard. And so the backyard turns into a muddy freaking mess is what happens. You know? Like I play fetch with my dogs in my backyard pretty regularly. And mud gets all over the windows, like it just gets everywhere. Yeah, market's flat right now. I would be trading. I'm down on the day. I'm losing money today. I don't know why. I was right about the direction that we moved to. I said that we'd probably bounce right here, and we did bounce, but it doesn't mean... I tend to think we're going to test the highs if we're this close to it. But with so much chop and it being Friday, I don't trust it enough to really make a big bet on it, to be honest. Yeah, the market's waiting on Powell, that's true. But I tend to think we're this close to highs, we're going to at least test this 23.9 level. I don't know for sure, but I tend to think we're at least going to test it. How did my water bill go up 100% in a month? Wild. AI? Maybe. Alright guys, we're up to 890s here. Right under this previous close. I might start to try to buy this here. We'll see if we can. We're too close to all-time highs. I tend to think we're gonna... Whoa. What's up with this drop, dude? Is this big money getting baked into something? I tend to think we were at least going to test this, but something happened. Let me look, see what stock this is. Nvidia down, but I don't know if that's it. AMD. We got, what, Apple. Google's still ripping up at 237s. Broadcom, maybe? It's down on the day, but not enough to cause this. Hassett says his deficit scenario is now looking optimistic. Spot gold breaks all-time highs. What a fake out drop. We get really close to highs and then just dump. Big money dumps. Yeah, I don't see anything causing this drop either. Just kind of a fake out, it looks like. I'm trying to see what stock caused the drop. I mean, Broadcom dropped, Nvidia dropped as well. Who did this? You know? Hassett said on jobs data, the president knows we're optimistic about the future of job numbers. Gold's breaking all-time highs again. Hey, give me a follow on x.com at beginner trades. At beginner trades. I appreciate the love. I sell on Fridays. Well, the market's up big on Fridays. On this Friday specifically. I mean, look. I mean, I guess the saying I always use, it's Friday. We ain't got no jobs. And we ain't got ish to do but trade the markets. Yeah, that was a Friday movie reference, but I think it's honestly pretty accurate today. It's Friday and we ain't got no jobs. If you know where the quote's from, I mean, you know. SPY just cracked under this sideways range. They found out about my water bill. Yeah, maybe that's it. Markets are so flat though, guys. I'm probably gonna get out of here. I'm gonna be on Top Step TV later. I think I'm gonna be on at 1 o'clock Central Time, so 2 p.m. Eastern. Y'all be there. Check out Top Step. You want to help support the channel? Again, they're a sponsor of mine. I'm biased, but useful to save money. Most day traders lose. I lost thousands. I told you guys this the other day. I lost thousands when I first got started in like 2 weeks. I thought I was gonna be rich too. I was day trading penny stocks. I wish I had something like that where I could limit my risk. Check it out, pinned at the top of the chat. Beautiful way to help support the channel. Y'all be careful today. Market's choppy. It looks like it's gonna start breaking down though, but I don't think it's easy to predict this direction. Maybe we're extended and we correct down. Maybe first move is the wrong move for jobs. I really don't know. I really don't know. Y'all just be careful today. All right, guys. Y'all be good. Have a great day. Remember all this stuff on screen. I don't even claim to be a good trader. Don't copy me. I might have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional. I'm not liable if you lose money. Top 3 worst traders sometimes. Definitely today. Y'all be good. I'll see you guys later.